I'm excited. We're a small enough group, happy to have a conversation too. So feel free to use chat. I'll take a look at that as I'm going through. And excited to share numbers, but also more than the numbers, the context around them. And I'll give you a little background kind of on what we've done and what we do every year in concert, both with PitchBook and also with the support of our supporters of this report, like the Science Center. I'm Dean Miller, for those of you who don't know, President and CEO of PACT. And if you don't know PACT, we're an organization that really helps to support and grow entrepreneurship and innovation in this region. And in many ways, no different than our friends at the Science Center, Ben Franklin, or other organizations. And we work really collaboratively with those organizations. One of the things that we focus on, and it goes back to the genesis of our organization 30 plus years ago, is capital. And a capital environment. So we think about that in terms of the whole cascade of capital availability for startups, all the way up through growth stage capital and beyond. And I'm going to touch upon this current state of venture in Philly. So let me start sharing some screens here. All right. Hopefully you can all see this, and then I'm going to go to my full screen. All right. So as I mentioned, we do this report every year in partnership with PitchBook. If you don't know, PitchBook is really definitive source, certainly one of several, but viewed as one of the definitive sources for deal data across the country and beyond. I say viewed as because there are always, and we can talk about this, differences around the edges between different reporting bodies. PitchBook happens to work with the National Venture Capital Association, also a partner of ours, and we've really come to develop a good relationship with them and a trust with them around this data. So let me talk and jump right into it. As we look at the data, it's important to know that we look at the whole region. So the US is chopped down into what is affectionately referred to as MSAs, metropolitan statistical areas. And so for example, our metropolitan statistical area includes northern Delaware, it includes the 5-county southeast region of Pennsylvania, and it also includes southern New Jersey. Now, what some people don't know, it also includes parts of a county in Maryland. Yes, that's right. So these are really well-defined MSAs that don't really change. You hear a lot of discussion about like voting, regions and changing those, from state to state. The MSAs stay pretty darn stable, and you have long-term data as a result that helps you to look at things, for example, like labor. So I know, another question or conversations going on right now is, labor force, workforce. So that data, again, also tied to MSA. So when we look at the region, again, it's that whole MSA. And by the way, we really make sure as an organization, PACT, that we get credit for deals in the MSA. And I can touch upon a couple interesting points on that. So when we look at VC deal activity, you would think that maybe it's the capital that we compare year to year. And yes, we do look at capital. We care about the amount of capital that was raised. But the best measure to look year over year, and not just in terms of your own MSA, but on a comparative basis, is the number of deals that get done. And one of the reasons why is what happened in 2019. And feel free to add in the chat if you know what that spike was the result of. First person in the chat wins. So there are spikes, there are outliers, really large deals that get done. And that was again seen in 2019 here in the Philadelphia region. But when you look at the numbers of deals, that gives you a really textured sense of the growth or health of a region. And by the way, as you look at this, it has a really kind of nice, low from the left increasing to the right, with a hiccup in 2020, which is, by the way, not unique to Philadelphia. I can't actually see the chat because my full screen is taking over. No, there's my chat. I'm just seeing if anybody has anybody actually responded?
I did, Dean.
Not Spark Therapeutics.
Wasn't.
Nope. Wrong answer. It was actually an investment, not an exit. If this was the exit chart, you would be winner.
Oh.
All right, so 2 other points on this. When we look at the deal count, again, I mentioned 2020, you see a dip. Obviously, COVID had an impact. And I would say that it had similar impact, again, across the US. When you look at US data, dollars continued to be healthy. And again, if you take that outlier out in 2019, you can see we continue to tick up in the right direction. And from a deal number perspective, and I'm going to dig into this a little bit further, but from a deal number perspective, there is a certain area that Philadelphia did really well. The answer, GoPuff, yes. Congratulations, John. You are right. GoPuff was the answer. And actually, here's a point on why we work with PitchBook. The GoPuff transaction was not originally included in 2019 data. And so we identified this, we recognized it, and we recognized that their data was incorrect. And very soon after that was obvious, PitchBook went back, confirmed that, and actually did it. And if you remember, that 2019 financing that GoPuff did was not released publicly initially. It was months later that it was released, which is why it didn't find its way into their initial data and needed a little massaging. So we were able to correct that. By the way, we already have an outlier this year. And you can also use chat to respond what you think that outlier is going to be. Here's comparative data. So you can look at this a couple different ways. And I will tell you right now, we're in the top 10. You say, wait a minute, Dean, it's not exactly the top 10. Your math is not that good. But when you look at the MSAs, there is one ginormous MSA right at the top of the list, San Francisco, Oakland, Fremont. And if you attach that to San Jose, Sunnyvale, Santa Clara, it makes up the Bay Area. You will not find any other kind of assessment of deal data and venture that doesn't put those two together as the Bay Area. And it is obviously the biggest by far, year in and year out. And it, you know, in Boston and New York has certainly moved up over the years. But when you put those two together, we are squarely and have been squarely in the top 10. That's actually different than a decade ago. We were outside the top 10 consistently. Philadelphia has grown into that top 10 role from a deal number perspective. And we come in and out of it, mostly in, depending on the dollar amounts. And I can tell you just by what has been done already in the first quarter, I think we're setting ourselves up well from a deal dollar perspective of being in the top 10. Again, I'm trying to keep track of chat here, see if anybody's asking any questions. Feel free to put any questions you have in there. And Chuck Sacco, you are right. GoPuff is going to be that outlier for 2021. All right, median deals, VC deal size. This is an important one. These next 3 slides I'm going to kind of go through pretty quickly because it'll give you a sense of deal sizes. In general, across the US, and Philadelphia has seen this a bit, you see VC deal sizes going up and the number of transactions going down. So, and this again covers late stage, which is the light blue bar at the top on down through angel and seed. And so you can see that if you drew a line from left to right, even with some choppiness, the angel seed, the early stage VC, the late stage VC have gone up consistently. Angel and seed has gone up a little bit, not as much, but we're talking about smaller dollars. But again, more dollars to fewer deals has generally been the theme. And you see these mega deals that are really responsible for a lot of that. Here you see a breakdown that's a little tighter in terms of range of dollars of the types from a deal size perspective. Again, you have fewer deals with larger dollars that are going into them. I'm going to jump to something here shortly. Actually, I think it's the next slide. The angel and seed area, and this is VC deals by number of stage, has maintained really consistent, if not growing, in Philadelphia. And the next, this slide and the next one are going to speak to that. This is a big deal because nationally, the trend has been a decrease in both the number and dollar to angel seed, but Philadelphia has maintained a steady increase. You see it in here, you see it here. Again, a little bit of a blip in terms of dollar amount, but actually the highest number of deals that we've had in the angel and seed sector. We look at this closely because it really talks to the long-term health of the region. Because if you see continuing increasing or maintaining of the number of angel and seed deal activity, you know that you're going to have, a good number of companies that go on to raise early stage capital, that raise growth stage capital. So having that base is really critical. And like I said, last year across the US, that 103 high watermark for us was actually a drop in most all MSAs and nationally. So that's a good thing from a Philly perspective. And I think we see it, right? We see it kind of from right just in the past quarter when we're reading the papers. People continue and are continuing to raise money. There's no doubt that there was an impact from a COVID perspective. We saw probably from our perspective, 90 to 100 days of people just with their heads down, focused on their own portfolio companies. But that came roaring back as investors realized they really had the capability to virtually not just engage with entrepreneurs, but also to invest in them. Again, I'm just taking a pause here, making sure I'm checking for any questions. Feel free to post them in chat. Pre-money valuations. So this is by stage, and you see a real big pop, obviously with late stage VC. This is, again, very much in line with what we've seen nationally and from some of our comparative MSAs. Pretty flat, if not just a little bit down from an angel seed perspective, as well as an early stage perspective, not unusual. But again, late stage companies that are obviously with significant revenues and or even profitability really garnering some significant pre-money evaluations. And that certainly is in favor for those entrepreneurs, no doubt about it. Sector. We take a look at this sector. We spent a lot of time obviously talking about healthcare. If we had to rejigger these, we would do it. Unfortunately, it's historical data connected to publicly available data from a jobs reporting or a classification reporting perspective. So you see that some of them don't exactly have current vernacular that they utilize, and you have to really couple some together. So if you want to have a good sense of healthcare, you've got to say, okay, healthcare devices and supplies, healthcare services and systems, pharma and biotech, right? And when you do that, when you put those together, it's obviously a significant sector. It is certainly comparative to software, for example, which obviously is standalone sitting here at the bottom, and the largest bar that you see outside of the other section. By the way, other section would include things like GoPuff. Here is that same thing in terms of dollars. And so, from a software, obviously software from a biotech, you can see that actually, if you add it all up, again, very comparable between the healthcare overall, when you include device service, pharma, biotech, as well as software as the two leading areas. But there is nice distribution. One of the things we talk about in Philadelphia are the strengths. Healthcare is very clear. And when we say healthcare, we use that as kind of the big H that includes pharma, biotech, as well as all the services, tech-enabled, digital health, med tech, et We know software is big, enterprise software is big, no doubt about it, but we are not a one-trick pony community. And that's a really positive aspect of the health of our ecosystem, no doubt about it. I'm going to talk about big fundraisings. So, there's a couple things here that stand out. Obviously, you see GoPuff, and this was, their small fundraising, right, in 2020, now surpassed by the largest fundraising, actually, that we've ever seen. But the rest of this list is pretty well dominated. They call it the drug discovery world, but it's obviously biotech pharma. And you see a significant number of transactions that were done in excess of the $45 million mark. Now, you might be sitting there and you say to yourself, hey, well, what about XYZ? What about this company? What about that company? And here's where the nuances come, because, we've talked to PitchBook about this, they keep venture very much separate from private equity. So depending on who the investors are, the lead investors, will determine how a company and a specific investment get classified. We've been advocating to them that the lines are completely blurred. that they should just put those two together and have, PEVC with all the data collectively. There are still obviously cases to be made that they should be separate, but many or most private equity firms are heavily investing in the tech sector, which is different than 10 years ago. I don't know if they'll change, but again, you might be sitting there saying, "Wait a minute, this is missing, a certain investment." And believe me, we do this actually at the end of every year as we collect our own data locally and say to them, "Why is this not included?" And we get granular in terms of classifications to understand. I'll give you another example. You might sit there and say, "Well, wait a minute. How come Michael Rubin's company is not included?" Well, Michael Rubin's company that has raised a lot of money is actually based down in Florida. So Florida gets the benefit of that. But we go through that kind of analysis to make sure that Philadelphia is well represented and accurately represented from an investment perspective. Next slide I'll show you just kind of talks to the quarter to quarter. And this is an interesting one because if you look at 2020 compared to previous years, and you look at, for example, Q2, the deal activity was not that far off. There was enough stuff already in the pipeline headed into Q2 that ultimately closed. And there was definitely a breath that was taken in between Q2 and Q3, but then a lot of deals got done that had already been in the pipeline. You see kind of a normal cadence over the last couple of years, even with COVID and how transactions got done within the Philadelphia region. And again, not too dissimilar from what we saw in other areas. Next one takes a look at CVC participation. CVC participation is corporate, and corporate ebbs and flows. But as you can see here, it's mostly flown increasingly from a numbers perspective, peaking out in 2019. One of the ones that drives this actually is the pharma biotech sector. So there's far more investment by CVCs, by corporate venture groups in that sector. That's been a big driver as we've seen growth in that sector of those firms coming back in with some serious capacity to put money in. And you can see obviously some of those spikes that resulted in that. A little bit of a fall off, obviously, from a dollars perspective, but not so much from a long-term continued increase in terms of numbers. Also, from an exit perspective, positive. So the 2020 would be the final close of Spark. Finally getting credit for that in 2020. It took a bit to get that transaction closed and through, which is why you see that nice big spike bar in 2020 on the exit side, which is on the left side of your screen. Fundraising has been challenging, and you can see barely any fundraising in 2018 and 2020 within the venture sector. We spent a lot of time looking at this as well because it also determines really the health and strength of an organization. And this is another one where you might look and say, wait a minute, I know such and such a fund raised money. Let me give you an example. NewSpring, they raise money on a regular basis. They are not counted in here. They get counted as a private equity investor. LLR gets counted as a private equity investor. Again, this is one of the things that we work with with PitchBook to talk about improving that reporting and numbers and better reflecting what a true region looks like in terms of tech investors. And most people would say NewSpring's a tech investor. Yes, they're in private equity, but it's really growth stage. It should be included. And hopefully we'll win that argument at some point in time and be able to include those types of numbers. All right, 2021. So we're really excited about what we all just saw in the first 3 months, ended yesterday. And we don't have updated like actual dollars for you, but we can tell you that this region continues to track positively. This is the largest venture deal bar none in Philadelphia history at 1.15 billion. I don't think it's been reported yet. In fact, I know it hasn't been reported yet, but we have another company that just raised 9 figures in this region. And that's just in the first 3 months of the year. Pretty significant financings at really, really incredible jaw-dropping valuations. And we see it also continuing, obviously, in the healthcare sector as well. In fact, the healthcare biotech sector is obviously benefited in terms of an exit perspective from both public markets, and perhaps will do so as well with the SPACs. But we've set up really nicely for a tremendous 2021. Yeah, as you all know, along with the Science Center, Ben Franklin, and others, we spent a lot of time, supporting those seed and early stage companies, and continue to see a steady flow through our programs, through our events, not a decrease, an increase. So I think it spells positive for the future here. Andre Greenberg asks if we're tracking SPACs. Again, another conversation that we've had with PitchBook. We actually thought about including SPAC data. It's not really relevant from a Philadelphia perspective, just in terms of numbers. They're spending more time analyzing that sector. Yeah, I will tell you, having been in the capital and the venture capital world for a couple of decades, SPACs historically are not positively viewed. So the incredible growth that we've seen over the past 12 plus months and how permanent it will be or cyclical remains to be seen. What's happening in that sector, though, is absolutely jaw-dropping and certainly worthy of reporting. We just don't see quite as much of it going on here. I mean, we've got some good examples, obviously, on the fintech side and a couple of others, and we remain focused on looking at that data. It's just not at the level to be reportable from a Philadelphia MSA perspective. I'm sure you all are looking at the Wall Street Journal and other trade publications on the national scope, and it really is just unreal. Last thing, like the Science Center, we historically and increasingly spend a lot of time helping to support underrepresented entrepreneurs. And we just want to point out three deals that closed recently that we really just think a lot of. So you've got Grovara, you've got Always On, formerly known as Buy Roar for Good, sorry, Yasmin Mustafa, and then Tendo, a company you might not be aware of, but it's gotten a little bit of press in this area, and it'll get much more given what they're doing, but founded by a sister brother team based out of Philadelphia. So on that note, I'm going to stop sharing my screen and open it up to further questions. And feel free to use chat too, if you're not comfortable asking your question out loud. First question that came in, do you track where the capital is coming from? So in our report, we do that. And we have been doing that for several years. Philadelphia, like most all MSAs, is a net importer of capital. And so we import on average roughly 80% of our capital. And you might sit there and say, ooh, that's bad. But the truth is capital is portable. And the best thing that we can do is actually build really good companies that raise capital. There's been a lot of discussion, certainly during my time about, well, what can we do to have more capital move here, to be based here? And that can be a worthy endeavor in some regards. But given our proximity, our ease of travel, based on the East Coast, close to DC, close to New York, it's not always a great proposition to pose. We spend more time as an organization, and I'm talking about PACT, in reaching out across the US to investors. And candidly, COVID has been really beneficial in this regard, because we've been able to, like this, engage with a lot more investors across the US and beyond. And Philadelphia is, as I just showed you, on the map, very much on the map, from early stage on up through growth stage capital. We get a fair amount of inbound from firms, again, around the US that want to efficiently plug into that deal flow, which is a positive thing. So we import roughly 80%. Not surprisingly, most of that comes from Silicon Valley, Boston, New York. And that has increased over the past several years. And again, we look at that as a positive, given the transportability of that capital. Is the net import true for angel and seed? Very good question. It is much more true for early stage, as PitchBook would classify early stage as well as growth stage. No doubt about it. That's where the numbers are. And so when I say 80% net importer of capital, I'm actually talking about dollars. So, when you look at, for example, where that money's coming from GoPuff, that's a significant portion, probably much larger than 80%. It is really important to have local angel and seed capital. And I can tell you, in terms of capital formation, that's where we spend most of our time. In fact, just before this call, I was on the phone with our lobbyist. PACT has a lobbyist based in Harrisburg. We spent a lot of time lobbying both for capital in general and on behalf of other organizations, for example, like Ben Franklin, the greenhouses, because that early and seed stage capital is critical, and it's hard to raise. Again, we get involved very much directly in that sector because that is a critical element. Going back to the slide I showed you in terms of the maintenance, if not continued increase of the angel and seed activity, we're really excited with what we see. And a lot of that is the recirculating of wealth that's been generated by more recent entrepreneurs in the tech sector. And for those of you newer to the tech sector, you might say, well, yeah, duh, that's what makes it go around. Philadelphia didn't always have that. So when I got into this industry 20 plus years ago, that capital came from individuals that did not make their money in tech. It came from people that made their money in old industries, that made their money the old-fashioned way, inheriting it. Those people still exist, but there's far more checks getting written by recently exited entrepreneurs. I'm looking around and maybe even some on this phone. What does the migration of companies who get external capital look like? Do they stick around Philly or move as they get capital? That has changed too. So I will tell you that it is investor dependent. It is business dependent. A lot of people look, for example, at Wharton and they say, wow, all those kids who start businesses out of Wharton go back to New York, and you're not going to necessarily succeed. And they look at Warby Parker as a good example, a company formed by a handful of Wharton students a number of years ago. Well, they're going into the eyeglass, but they're really going into the fashion industry. And by the way, it made sense personally for them to go back to New York. I'm not sure that you're going to convince that company to stay locally. Again, it's very company, very industry specific. But that all said, I would tell you that over the past decade plus, the view of Philadelphia as a base of talent has changed tremendously. There was always faith and confidence, for the most part, on the healthcare life sciences space, that talent existed here, with some exceptions. There were definitely Bostonians and Boston investors who said, no, you can't be based in Philly, you got to move to Boston. But on the tech side, that has changed from my perspective in talking to investors 180. And it's not just investors, it's also entrepreneurs. So if you go back a decade plus ago and you were an entrepreneur based here in the tech space and you went to raise capital from outside this region, there was a high probability, I would tell you 75+%, that you would be asked to move wherever that capital was. That has completely changed. It doesn't mean that we've solved our talent equation. Again, something else that we share in common with the Science Center and others is working on this. But in terms of founders that are capable of raising capital, worthy of raising capital, and certainly that have had success in doing so and exiting, we have only added to that story. Do you think the region has any particular needs to maintain a healthy startup and funding ecosystem? More deal flow. I do think retention matters. We don't do historically, I should say this, we haven't historically done a great job of telling the story of Philadelphia. I think there is a really great time over the past couple of years of seeing changes in that. We're very much, PACT is invested in the Philadelphia Global Identity Partnership, which is really all about developing a common narrative for everyone to utilize. And we're going to be dropping, and mark your calendars, so I won't have a date specific, but it'll be in May, a open source brand toolbox that everybody on this phone, anybody can access to help tell the story of Philadelphia. And it could be if you're recruiting somebody from one of your teams. It could be if you're trying to convince a investor out in California that no, Philadelphia is great, this is where you want to be. And so telling those stories is not, it's certainly city officials, regional officials, yes, business leaders, yes, but it's all us. It's up to us to tell that story and tell the stories of Philadelphia that change people's views. And I think we attract a lot of people to come to college, university here. And I think you all know the story of Campus Philly that was started a decade plus ago at a time when we retained a little more than 20% of our students. That's more than doubled. And I still hear people saying, oh, well, the brain drain, we lose students. We have better results than Boston. Those kinds of stories need to be shared more broadly and consistently, to ensure that we can continue to build up a healthy startup ecosystem. The successes that we see that we just covered will continue to fuel that. Again, this generation of entrepreneurs that is in the mix of both building and exiting is putting money back in pretty consistent ways, which is awesome. The toolbox, by the way, is going to be on an independent site. And the reason for that is that the collaborative is meant to be independent so that all can access it. And it doesn't matter if you're at the chamber or the Science Center or PACT or just in your own companies, you can attach a link with those resources. I'll give you an example of that story. Maybe you saw this. Yes, I think it was yesterday. The Wall Street Journal talked about housing price increases. And it had it was like a front page thing, right? Double-digit housing increases. And every major city was included except for Philadelphia. And I looked at that, and normally you'd say, wow, why didn't they cover Philadelphia? And my response was, yeah, because Philadelphia continues to maintain a status as a relatively, I say relatively, affordable metropolitan area sitting on the East Coast, maybe the last one. And that is part of our charm, right? We are a big, small city that has incredible resources and access, and yet we sit in the middle of what we would call the commercial corridor, with upwards of 80% of population buyers as well as partners and companies. Again, those stories we all need to tell, and that'll continue to help. I'll get a little more particular because the question was particular. Capital matters. And that early stage seed capital, yes, it needs to come and be recycled by both individuals and investors. It's really hard to raise seed stage funds. And so making it easier for people to put money into companies, making it easier for organizations like Ben Franklin, the Science Center, the greenhouses to do their work is really important. We haven't had great support, candidly, both at a state commonwealth level as well as a city level. Just haven't had the dough to be able to do that, but we haven't given up hope in the potential for that. I know a lot of people have been talking about the windfall, right? The windfall that's coming to the city. I was just talking about the windfall that's coming to the state. And hopefully we can see our way to fueling some of that and getting it into that startup funding ecosystem. That's our hope. That's where I spend a good chunk of time talking to legislatures and leaders both in Philadelphia and in Harrisburg. If anybody wants to join in, we always accept help. Other questions? In the capital space, besides biopharma, has Philly been able to cut out a position that gives it a name in contrast to other metros? Great question. Off the tip of my tongue, enterprise tech. I can tell you that I get calls from some big freaking funds that are not interested in the biopharma space. They're interested in enterprise tech. And we have some great stories that have existed here historically, that exist here now, and great stories that are building on this. That is a story that we tell. We don't hear it, honestly, consistently from others as much as I think we should. This is one of those stories that is still a little bit of a secret. And the reason it's a secret is, like, unlike GoPuff, which is great, by the way, just incredible, and a great brand, we have incredible non-brands in this region. That nobody can recall. Like, even if you just heard the story like yesterday, it's like, scratch your head, like, just doesn't roll off my tongue. It's not GoPuff. It's not something that I'm using to, myself, so I just can't remember it. But we could give you a laundry list in a very short amount of time of companies you maybe never have heard of, that are in this region that are a couple $100 million growth stage enterprise tech companies. So that's my answer. Now, I say biopharma, but I would also include, obviously, healthcare, like digital health, right? So that should not go unnoticed because it is very distinct from the biopharma space. So that would be right along with enterprise tech that just comes spilling out of my mouth when people ask me that question, particularly investors outside the area. And those are really, candidly, those are the kind of the big three good places to be, that I think have real longevity and will continue to matter. You see, everybody has always historically said, oh, well, we need more consumer-facing brands. We've got a fair number, but those tend to ebb and flow. But the consistency from an enterprise tech perspective has always been there. Y'all have great questions. Others, feel free also to come on mic if you've got something any more complex to ask. Come back to SPACs for a minute. I'm not against SPACs. I just am not sure that they're going to be around long term. We always we track those obviously from a national perspective, but also what's going on here in the Philadelphia region. They need to be taken seriously. I'll tell you, there's firms in this region that are starting to spend more and more time in the space, they might stick for a bit. I remain a skeptic, just because I know historically kind of how they've ebbed and flowed. If you could pick one thing for Philly to lean into to improve the ecosystem for everyone, what would it be? Now, I'm talking about capital. It's a really good question. For Philly to lean into. It used to be collaboration. I think a lot more of that happens. Y'all might think that, there's still more room to be done on that front. I actually think if I could pick one thing, it's the sharing story side. Because even the companies, by the way, that I just mentioned that people just don't know, they don't do a good job of it. And we're talking about big companies that they might have the resources, they like to stay under the radar. They love to stay under the radar. I'll give you one example. Chatham Financial. Anybody heard of Chatham Financial? Yeah, they are a powerhouse in their segment. Most people have never heard of Chatham Financial, and you probably won't, because their founder and chairman just doesn't believe in kind of sharing the story, wants to stay under the radar. But I guarantee you, similar to our friends at Bentley Systems that went public in 2020, there'll be a time when you will hear about Chatham as a result of an exit. How do you see the cannabis impacting Philly and PA growth and development? Depends on if it goes, or I shouldn't say if, depends on when it goes recreational for sure. That'll be a big question. I mean, put in perspective, Pennsylvania is a big freaking market, nationally. So, eyeballs are always on Pennsylvania, regardless of what industry you're talking about. Sadly, yes, cannabis, gambling, and other types of sin-related taxes have been the focus in that regard, that have brought a lot of people in from out of the area. Gas also, and fracking being another one of those. But I think that there will certainly be growth. The question is how much of it happens from the inside out or the outside in, with people coming into the region. There is capital being raised locally to deploy nationally in the space. I think that that's a sustainable way to think about it. Let's just hope that when the government does do that, they appropriately, create a sustainable model, and also perhaps give favor to people that are in region. Inclusive growth, maybe that was Tracy's answer, and I agree with that. If there's one thing we can do, we put up as the final slide, if you didn't arrive on time, just a couple examples of underrepresented founders. We had been really focused on ensuring that there was growth in representation from underrepresented founders, pre-George Floyd, pre-summer 2020. But when that happened, we took a pause within our own strategic planning as an organization and said, we need to double and triple and quadruple and go beyond in terms of our efforts. And we've been doing that in a number of ways. That inclusive growth is really important to our region, to our society. We take it really seriously, and we'll continue to do so. And I agree with Tracy that beyond telling the story of Philadelphia, it's something we can do to really ensure. Now, I'm going to give you a positive point. On the front line, where we spend a lot of time, we have a program, again, collaboratively with Science Center and other organizations called Mentor Connect. And I think there's some people on this phone involved in that. And we track very closely the entrepreneurs that come through that, particularly the mentees. And we see a very diverse group of mentees that naturally come in that group. I'm talking about racial diversity. I'm talking about gender diversity. I'm talking about age diversity. And gives me a lot of hope in terms of that next generation of entrepreneur for sure. Are there particular VCs that do or don't invest in Philly companies? Any that hunt or avoid opportunities here? I wouldn't say, Philadelphia once upon a time was a flyover city for some investors or some segments. It's no longer. It's a destination. What makes a city a destination? More than one opportunity. And as deals get done increasingly, investors take note of that. Look no further than what's happened in the past 15 months. And if you add them up and look at all the different types of high profile investors investing here, cat's out of the bag. This is an underpicked community. There's still opportunities for people to find that next great company, which is awesome. Could you comment on the surge of incubator lab space, Sierra Discovery Labs? Are we overbuilding or creating a magnet for an influx of startups? I don't think so. I really don't think so. And I don't know if Audrey's on from Discovery. She can tell you in terms of demand. This has been a hot topic of conversation for a bunch of reasons over the past year plus. And one of them is that from a real estate perspective, all the people sitting on office space saying, are the office people ever going to come back, have spent a lot of time thinking about and actually acting on the conversion to lab space. We have, I would tell you, a relatively insatiable appetite. And we have some great academic institutions that help to create that demand. Look no farther than the heels of the Science Center when you walk out the front door, including the Science Center, but Penn, Drexel, CHOP, etc., are massive consumers of lab space. Almost to the extent, as I've talked to people, over the past year, of pushing out the startup, right? I mean, some of the most expensive real estate is in West Philadelphia, if you didn't know that. And that's not a bad thing. That's just supply demand. And in terms of building, you got to think about it in two regards. There's a manufacturing component of it. Audrey can speak to that. There's also kind of a lab discovery side. And years ago, Philadelphia started broadening that investment, beyond that West Philadelphia corridor, particularly out into 202 and other pockets down into Delaware. And a lot of that is within the big pharma world. Not as accessible to the startups, but there have been great growth. You look at Pennsylvania Biotechnology Center up in Doylestown, obviously what Audrey is leading out in the burbs as well. And I'll tell you that it's, I've talked to some really high profile investors that absolutely know about it. They're not just like, they're not just like reading about it in a paper, they're tracking it. Because they know that serves as a magnet for entrepreneurs. It serves as a magnet for just investment overall, which is a good thing. Audrey, you got any perspective on that?
Yeah, there's a really insatiable need for incubator space. They're all sold out. So unfortunately, incubator space is a loss leader unless you're going to take an equity position in some of the startups and you go through a selective sort of underwriting investment committee process and bring in the ones that you think are going to be successful. Certainly in the lab space area, it's really expensive to build labs. So you're talking about, basic lab with equipment anywhere from $700 to $2,400 per square foot with equipment and whatnot, depending on if it's clean room space. So a lot of folks out there, developers in particular, have not been incented to build this stuff on spec because it's so expensive. That doesn't mean there's not a need for it. So I'm super excited about all the new incubator space that's coming online. The area needs it. By the way, what you're talking about, Dean, is if you expand the funnel up here and you have more homegrown success stories by funding these early stage ventures, it's going to lead to the region increasing in the rankings and getting more funding and all the wonderful things that we're all expecting for the economic growth of the region. And then just in terms of manufacturing capacity, I think that's needed for the whole continuum and life cycle of some of these life science companies. So all of these things are critical components to feeding the ecosystem and helping us increase in the rankings.
Totally
Thanks for the opportunity to speak.
Yeah, thanks, Audra. Next question was,
can I chime in for just a sec on that?
Yeah, man.
So, if you look at other cities similarly situated around the country, Philadelphia is just way, way under-resourced in terms of early stage incubator lab space, right? You look at something like Lab Central in Boston, they've got 150,000 square feet of lab space rented out in 3-foot bench increments for, basically filled out, right? And so Philly is a top 3 region for NIH funding, but when you look at those things being spun out and being developed, that's really underfunded and a big, big opportunity. So, I would echo Audrey's point that lab incubation is also, is a loss leader, but so is, if you look at S1 filing from WeWork, so might be co-working generally, right? And so that's not particularly unique, but it is really important for this region to do a better job of investing and supporting those types of really mechanical, physical infrastructure pieces that help reinforce the communities and act as more of a hub to pull people through. So yes, the investors are figuring out that we're here finally, right? They're looking under rocks, but it's hard when you have to spend a full day in Philly and drive around, out to King of Prussia and then into the city and then out to Springhouse and then into, someplace else to navigate and see all those things of interest. And I think that's true whether you're in the tech ecosystem or the life sciences ecosystem. And we can, of course, Bucks County as well, John, but we can do a better job, I think, as a region of making that more navigable. And PACT does a great job of leading on a lot of that stuff. And reports like this.
Yeah, and one more interesting statistics, although it's a loss leader, if you're a real estate owner and you have an incubator on your site, each company as it graduates will need 2 to 3 times the square footage that it's in the incubator. So it's an incentive for the site developer to have that on site, in addition to sort of increasing the hub and the ecosystem and the spontaneous collaboration that occurs at some of these sites.
Mm-hmm. And the concentration of assets is going to matter. You can see pockets of concentrations of assets, and again, the Science Center is a wonderful one in that regard. Let me jump on to a couple of the other questions. Some other good ones have come through. Is government publicly funded venture included in the stats you presented? Thoughts on more publicly funded venture in general? So if you're asking about, for example, like SBIR grants, the answer is no, because that's non-dilutive capital. This is just really dilutive capital that's raised. But Ben Franklin dollars are included in this. I mean, you'd call that kind of quasi-government because Ben Franklin is its own thing, even though it gets some funding from the government, from the state government. But I don't know, John, if that answers your question. Feel free to put that in chat or come off mute if you want to ask further.
Yeah, that Ben Franklin type investments is what I was looking at. Yeah, we actually run a new Accelerator fund in Bucks County with funding from economic development dollars that the county holds the investment. So things like that as well. So we administer through Startup Bucks.
Yeah, I mean, I'll tell you, one of the things we did early on, and this goes back 10 years ago, when we first started doing this report, we worked with Ben Franklin to ensure that the reporting was accurate, and PitchBook was not getting all those deals. So we helped develop that path for Ben Franklin to ensure that all their deals were getting reported. Because you can't just assume that something's going to get done, especially at a seed stage level. You actually have to work at a little bit, especially at the volume that they do. So,
could you are you able to self-report to PitchBook?
You can. I mean, if you got, I mean, it can't guarantee that it ends up in a report, right? It needs to be validated, but the answer is yes.
Cool.
And if you ever wanted to do that, feel free to reach out to us. We can help make it happen.
Awesome.
Marcus, looking at Philly in the center of the East Coast and so many metros, are we doing anything around convening for this side of the US? I'll tell you, we have sister organizations around the US, and we do convene with them, not just in the East Coast, but around the country, and talk about things like best practices, steal ideas. We love stealing ideas, and all sorts of things. We don't specifically do that just within the compartment, say, of Pennsylvania, New York, Maryland, DC. We do it broader than that, but certainly, and from a capital perspective, we don't really do that. Again, I mentioned we do collaborate with the National Venture Capital Association, and it includes other organizations like ours. Thoughts on the future of CVC and a call out to Touchdown Ventures. CVC, again, similar to maybe SPACs, although less controversial, has ebbed and flowed. Corporates just aren't candidly set up to sustainably invest in venture. You may ask why. Well, listen, they have quarter-to-quarter reporting, and when the thing is going well, they can deploy money into risky asset classes. When it's not, they generally pull back. And so venture investing is not for the faint of heart, as we all know, and a lot of corporations just don't have the stomach for it to do it long term. That said, we have seen, again, increasing attraction of eyeballs to Philadelphia from outside the region in particular. And a lot of that has to do with the fact that we've seen these nice growth stage investments, and that's where CVCs have benefited from spending most of their time, from growth stage companies that have already kind of proven their value, and they can come in with a much bigger check. And I think there's more to be done there. Certainly I talked to what's happened on the pharma biotech side, but also on the tech side, where I think you'll see more growth, specifically in Touchdown. I agree with you, Amon. Touchdown is a force that, if you don't know about, it sits right in this region, that on an outsourced basis handles the corporate venture capital activities for a host of organizations, and that's not going away anytime soon. In fact, their model is much more sustainable, candidly, than just a corporation developing their own capability. We've seen that come and go a lot. Getting around Philly metro is more painful than most. Well, Marcus, you might find this interesting, but we actually have a much better system than many other cities. So this is one of those things where we look at it and say, man, I got to ride SEPTA again. And the truth is, there are people out there that would die for our experience. We just don't know it because we haven't spent enough time in those other regions, either in terms of access, right, getting from point A to point B, or just literally speed. It ain't perfect. Don't get me wrong. I'm not a paid correspondent for SEPTA, but it is better than a lot of other metro areas in our comparative group. Yeah, it is still painful, and so is the pothole that I almost lost my car in this morning. Some people call Bucks County the Silicon Valley of the Philadelphia area. Bucks County, I think, has a lot of potential. I totally agree with you. Just don't say the silly Bucks, because that sounds like it's actually a fake thing. Will future reports indicate diversity dimensions? That's a great question, Chuck, and I absolutely have an answer for you, because as you might guess from what I shared, I've been talking to PitchBook for years about this. The truth is, it's going to be harder to get than gender. You've seen a lot of gender reports out because they've been tracking gender for years. They have not been tracking diversity dimensions. And so they're more at a start now. And when they have enough data, they'll be able to report it. But they don't have historical data. It's much, much harder to come by. And it, really, somebody mentioned about self-reporting. They're not, doing interviews. They're gathering this information. They're scraping it. They're identifying SEC filings, all that kind of stuff. None of which comes with gender, race, etc. classifications. So it's a whole nother layer of data gathering that they've had to think about and figure out. We actually talked to them about, okay, could we do it like on a customized basis? And then we said, well, this is going to be really hard, to go back and do. So I hope to be able to report on that in the future. We have included tidbits of gender in past reports, and I hope to do more on the gender front. Candidly, I was hesitant to do just gender when I think that it's an incomplete picture. And so that was one of the reasons we did not include it in this report. Not because we don't care about it, because we just didn't think it was complete. Is there any other county level venture funds like Bucks National? I think this is great and successful marketing pitch. Yeah, actually, a lot of people don't know that like these counties do put money in their pension funds into venture directly, co-investing with Ben Franklin, etc. The answer is yes. Like money does go in out of pension funds as well as economic development around the country and other places. I can argue with you that Pennsylvania, as a rule, did a great job of this initially and is completely underfunded really good programs over the past decade plus, sadly. Like if I beat my head up against the wall in Harrisburg on a regular basis over this topic. So yes, Michael, it is positive. It needs to be so much more. Any lobbying for floating a bond to fund startups? Yes. It falls on deaf ears though, candidly. And I will be really honest with you and tell you, I spent a lot more time thinking about future leadership from a governmental perspective than I do the current one, because I've kind of lost confidence that we'd be able to get something like that done. And you know what? You don't necessarily need to float a $1 billion bond. And there's a lot of ways to do this. And from our conversation about seed and early stage, you don't need billions of dollars necessarily to go into that, right? Tens of millions make actually a big difference depending on the stage in which you put it in. And I will never advocate, you'll never hear me advocate for putting government money into later stage, but you don't need to. We don't need to. That's the capital that gets attracted from around the globe. It needs to be early stage, and you don't. But you do need a signal. So when Massachusetts does, and we've tracked this and share these stories on a regular basis at a primarily a state level. But as Mike pointed out, it's over 10 years. Okay, well, yes, $1.5 billion is a lot of money, but it's over 10 years. So you need to have kind of a really long time frame and a horizon. And candidly, we just don't have it with our legislature right now. I have hope, by the way, for the future on that front, which is why I'm not giving it up. Trying to get some good info on Philly venture activity, particularly around bio. Is there a list of key capital sources at each level of growth? So sadly, we used to be a homegrown, really kind of meaty biotech capital base, and that is basically eroded. And you say, oh, geez, that's the same. Just as we have this great, takeoff with cell and gene therapy and all these other things. Capital's portable. Yes, we lost our base. Some of that base went to Boston. Some of that base, from a corporate perspective, went to Silicon Valley, London, New York, never to kind of return again. But it doesn't, as we've all figured out over the past year, it doesn't matter where we sit. It matters where we do business. And the truth is, from what I showed you, people are doing business in Philadelphia. That's what matters. That the capital is coming. And so, I struggle with that question, Ed, because I get asked, as you might guess, questions a lot like, hey, who should I talk to? And whenever a biotech entrepreneur says, well, what firms exist here? I always have a little bit of a laugh, sad laugh, because it's a really short list. That means the people that are here get great attention, but probably too much attention. Philadelphia seed funding. Eamon, you going to share what that is? Or is that still in the coming soon mode?
No, I'm just saying we'll do a better job of messaging that seed funding can be found and deployed here. We'll be a better beacon to draw more people in. You're
doing it, right? You just did a fund with Drexel, and again, you don't need to raise tens of millions or hundreds of millions of dollars necessarily if you're going to be a really good and consistent seed stage investor. And this is the beauty of what we've seen, particularly with entrepreneurial involvement in our space. Some of it's been organized. You look at certainly look at like Robinhood. You look at Broad Street Angels that came out of nowhere, doing real deals. There's always entrepreneurs, maybe someone in this channel, that say there's not enough money in Philly, and I tell you, you're not looking, because it exists here. It really exists. And yeah, I mean, it's one of the things we try to do is help to elevate those deals that get done, elevate the people that are doing them. You know, if you think about our capital conference and the Lion's Den, people always ask this question. The genesis of the Lion's Den was, hey, we have all these kind of new entrepreneurs that have had success that are putting money back into companies. Let's elevate them so that people are more aware that they actually exist. Put them on a stage. It wasn't as much about the entrepreneurs because we weren't sure what happened. It was actually more about, you know, getting these lions, these angels on stage, and you know, more of that has happened significantly, which is great. All right, I think it might be over time. You've been a terrific audience, and I really am grateful and thankful for all you do, because I know a lot of people on this call are in the capital world, in the entrepreneurial world, in the world of supporting both. Thank you, Tracy and the Science Center and Venture Cafe team for having me. I really appreciate it, and for your support for this capital report. It's, you know, again, as I shared with you, it's really important that we have accurate data, and we're grateful and thankful to you all for supporting so that we can do that.